Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. You know the drill, founded it back in 2003, 21 years ago, to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms, such as our 21 SPY and ES mean reversion systems, and of course, our amazing KISS trend systems. Anyway, absolute bloodbath on the market today. As you know, this image I actually asked Midjourney AI to create it. It's kind of funny what it came up with. Kind of looks like Walking Dead meets Wall Street. Anyway, absolute bloodbath today. So let's go and get started with this newsletter video at hand. This is our backend recorder for our standard website subscription service. If you're on YouTube and you haven't subscribed, please consider doing so. That really helps us out, and you get 10 times the content you do on YouTube. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, July 24th newsletter. As you can see, newsletter is divided into 6 major sections. First off, guys, as you know, it was an absolute bloodbath on the market today. Absolute bloodbath. In fact, just out of kicks, I asked AI to create this image. The exact words I said, Wall Street stock market bloodbath, create as 1980 slasher horror movie. This is what it came up with. It's okay. Kind of looks like Walking Dead on Wall Street a little bit, but whatever. Anyway, bloody red day. The S&P 500 lost 2.3% or 129 points. We haven't seen a down day like that in quite a long time. We knew it was coming. You know, it's been too long. The charts were all set up for a decline. They were actually set up for a decline early last week, and boy, did they ever. The Qs lost 3.6%. That's a big loss in a week. So that's one day, guys, or 17.4 points. Again, the market bounced into Monday and Tuesday. It stalled at that supply zone that I highlighted on Tuesday, and Steve highlighted again. I highlighted on Monday, and Steve highlighted again on Tuesday in his newsletter. Okay, that was a great area to sell, take profits, take a short, whatever. And anyway, bloody red day. So as far as the S&P and Nasdaq, the Dow lost 1.25%. or 500 points, while the small caps IWM lost 2.1%. Again, as I stated, yesterday's lower high move stalled right at the supply zone that we illustrated both on Monday and Tuesday. Okay, the bullish case would have been the wave. That bounce was a wave B, lower high, and we're now working on this wave C, final move down in a wave 5. The more bearish view is we'll have 5 waves down of 1. I still don't favor that at this time, but again, we always have to keep an open mind. As you know, some of these mean reversion systems have been going long. In fact, more mean reversion systems went long today, and I'll cover that in just a minute. But let's go ahead and move on. So image number 2, first off, talking about the KISS systems. So as you'd expect, KISS systems have been exiting this market over the last couple weeks. Today, Tesla, Mara, Dow, and Apple exited. But, you know, they still closed out nice trades. So the Tesla trade still made 15.5%. Yeah, had to give up quite a bit after yesterday's earnings. But, you know, the system doesn't know about earnings. And if you were trading this, you could have always elected to sell your KISS system trade before the earnings. But again, still closed out 15.5%. And the previous trade, it made 23.7%. Mara closed out with a 20.5% winning trade. Previous trade made 13.6%. The Dow only made about 2.5%. Last trade was 3%. Apple closed out a 16.3% gain. The previous trade was 16.4%. You can see just a few things open here still. And a lot of things, again, are in cash, as you'd expect. These are trend following systems. They keep you in the market as it's uptrending, constantly raising their smart trailing stops. So the KISS systems are doing their job, guys. You know, they're keeping you protected. They don't ride downtrends. All right. That's what the mean reversion systems are for. Whenever the market starts downtrending, the mean reversion systems start scaling in. Okay. Let's talk about that next. So image number 3. So here's the current open mean reversion systems for both the SPY and ES futures. Remember, I have 21 systems, mean reversion systems, that I run across both of these instruments, the SPY ETF and ES futures. We use MES futures, that's the micro contract. So again, they've been scaling into this pullback. So on the SPY side of things, we have two subsystems. So we have the trend pullback, took a trade last Friday. We had a bounce, but it was a lower high. The system almost exited there. In fact, I'm kind of kicking myself. Again, it's hindsight, but for maybe not manually locking in half those gains. But it is what it is. System almost exited there, but didn't get up quite high enough. And then with today's sell-off, the system took a second entry. That's what these systems do. They can take up to 3 entries. All right, like back here in April, you can see the system did a first entry, made money, and then it had another trade that had a first and second entry, made money. So it's now an officially 2 entries. A brand new system went long today, the QEBTS. So it took a first entry. All right. Now on the ES side of things, we have essentially the same thing. We have the long trend, both first and second entry. And it looks like I have 2 of these. Apologize, guys. There's the other one is the QEBTS, which has a first and second entry, and there's also the QEBTS, just like on the SPY, which had a first entry today as well. All right. So the ES has 3 open subsystems. SPY has 2 open subsystems. How do you trade that? Again, it's just up to you. Each individual subsystem is meant to stand on their own. Most of these systems have between 80 to over 90% winning trades. So they're all standalone. They're all mutually exclusive to one another. You could elect to do one of them. You could elect to do multiple of them. It's kind of your choice, right? I always tell folks that if you're trying to limit the number of entries, like for example, if the subsystem, one of the subsystem goes long on the exact same day on both SPY and ES, maybe consider just doing one of them instead of both. Again, it's up to you, but this is currently what's open. Again, mean reversion systems, guys, they're not as easy, I think, psychologically to follow as the KISS trend systems, because you're buying into weakness. You're buying when things feel like death, when you're worried about, oh, the market could have an even bigger correction, I'm going to get caught in it. So these are always tough to trade, but they almost always work out. So it is what it is. I communicate what the systems do. Next. Image number 4. So here's the SPY and ES mean reversion systems for this year. As I've stated, they've been fairly quiet this year because why? The market had such a very strong uptrend this year. The mean reversion systems, they buy pullbacks and uptrends, and we haven't had much pullbacks this year. Finally, we're getting a nice healthy pullback in the market, so the systems have started scaling back long. So you can see, again, the open trades on SPY and the open trades on ES futures. Okay, there's been so far 19 trades on the ES side and 18 trades on the SPY side. And you can see the profits. So again, still nice gains. Not everything's a winner, but overall systems do very well. Next. Image number 5. So here's that new subsystem that took a first entry today. Remember the trend pullback took a second entry today. So this one took a new first entry. So it obviously has a better entry than the trend pullback. So here's the statistics. And the statistics are similar to the ES futures. So I'm just showing the SPY. So you got a profit factor of about 20. So again, that means for roughly every dollar it lost, it made 20. It's a very good profit factor. 151 total trades, so that's a nice healthy population with 90% winning trades. Earlier today, a subscriber posted a system that had 7 trades over 5 years. It was CrowdStrike. My comments to him was just, 7 trades over 5 years isn't statistically significant, But, 150 trades over, 20 years, 25 years is statistically significant. Average hold time about 11 to 12 days, as you can see, and healthy profit curve. So there you go, guys. Oh, finally, here's some of those volatility systems I've been discussing. I don't officially email these out yet on the website. Plus, right now they're doing the same trades anyway as some of the standard mean reversion. These are based on the volatility instruments for these respective instruments. For example, the Dow, it uses the DXD. The SPY uses the VIX. The Qs use the VXN, etc. But anyway, the Dow took a second entry today. QQQ volatility took a second entry today. SPY took a second entry today. And I've showed the statistics to these already. Again, they have very good statistics around profit factors of 10 to 20, which are excellent. And again, I'll let you know when these decide to exit. They exit after a decent oversold bounce. Okay. Next, let's go back to the general market newsletter. So item number 7 shows the index sector table, what transpired today and this week. And look at the bloody red here. With today's sell-off, look at these down moves on the major indexes, especially the Nasdaq. That's generally a big move for 1 week. That's 1 day, guys. 3.65% on the Nasdaq. So all those indexes are now negative for the week. Remember, they were positive yesterday and Monday. The only thing up slightly is the Russell. As far as the 21 market sectors, there is some green here, though. Now, the green primarily in the defensive area, okay, which is what you'd expect. Utilities, drugs, healthcare, and biotech. Those are all defensive names. Otherwise, big losses here across the board. Currency-wise, US dollar actually down today slightly. It's pretty flat for the week. Crypto was up slightly today. It's down for the week now. Commodities, DBC, the index was slightly down. It's down 0.75% for the week. Crude oil bounced back a little bit, up 0.8%. And natural gas, after rallying early in the week, down 3%. It's still up for the week. Copper down another 1.25%. Uranium down 2.8%. Coffee, sugar down. Precious metals, gold up, silver down, but these had pretty nice reversals off their highs. The stocks are down, GDX, the miners. And as far as the bond market, nice rally in the 10-year, 30-year treasury yields. That didn't help the market. And one thing I'll be showing later here is the yield curve. The yield curve, guys, spiked up. It is now 0.97. Remember, when this goes over 1, that's typically when your recessions are going to start. So I do believe a recession's coming. Next, item number 8 shows the economic news calendar. Tomorrow is July 25th. We have GDP, initial jobless claims, etc. And the big news item is the PCE prices. And of course, remember, guys, we are in earnings season. Make sure to check your stocks that you're trading for individual earnings. Earnings haven't been that great for stocks this time around. Google, Tesla, Ford, in after hours here is way down. They lost over $1 billion on EVs. So again, earnings haven't been too kind to most of these stocks at the moment. All right, let's go ahead and move on to the index charts. So the first chart below, item number 9, is a 30-minute chart of the S&P. I'm starting off with this because early last week, okay, guys, we showed this 5-wave completed wedge pattern that had MACD divergence. Whenever you have 5 waves up and a wedge, you want to pay attention. That should have had your attention to say, hey, if you're super exposed in the long side, I need to reduce that risk or take an aggressive short or a hedge. Anyway, gap down below the wedge. When you get a gap, that's a breakaway gap. That's something you could chase. You could have shorted that. We had a big sell-off, last week into Friday. Then we bounced Monday, Tuesday. We stalled right at that supply zone that we warned about on Monday and Tuesday. That was an area to take profits. What I didn't know at the time was I expected a pullback there. What I didn't know is if we'd get a higher low, then maybe one more move up. Either way, I was viewing this as a lower high wave B, and that ended up being the case. And then today we gapped down strongly and we just puked. We are quite oversold here in the short term. I think we could bounce here any time. So let's go ahead and move on. Chart number 10, here's Google. Remember, this reported yesterday. Again, got hit on earnings. And chart number 11, here is Tesla. Remember, this reported yesterday after hours, and boy, did they get hit. Down 12.3% today. Again, had a hell of a move from our long entry back here in mid-June from that tight coil. It was a great trade. Again, hopefully you didn't hold into earnings. Hopefully you took your profits ahead of time as it got smashed. Finally, chart number 12, here's TSDD. That's that double inverse ETF for Tesla. Remember, this I gave as a long idea back in early July as a mean reversion bounce, which you got to that 9 EMA. But then it consolidated, and I said, you know what? It doesn't look like it's going to make another low. I commented the other day, I said that it looks like it actually wants to pop up, and that's exactly what happened. Yes, earnings ended up being a catalyst, but again, I've been doing technical analysis, guys, for close to 30 years now, and what I've seen all these years is that the news will be the catalyst, but generally the chart sets up previous to the news, and the news just comes in to confirm it. It's almost like the charts predict the news in a way, kind of like the tail wagging a dog or something. Anyway, but nice pop out of that. I don't know if anyone still owns some of that TSDD. I actually owned a little bit of it. Chart number 13, here's the 60-minute chart. Again, you can see how it had that nice base in the 60, and then, of course, gapped up today. Next, moving back to the index chart, chart number 14, here's the daily view of the 5 key major indexes. Again, remember, last week as well, the Dow was outside its upper Bollinger Bands 4 consecutive days. Kind of like a blow-off move. And then now, big sell-off down to its middle Bollinger Bands. That's 20-day moving average. It's obviously holding up better than the S&P and Nasdaq. Here's the S&P closing right at its lower Bollinger Bands now. Look at the Nasdaq and Nasdaq 100 actually closing below their lower Bollinger Bands. And the Russell was down, but it's holding up fairly well here. Chart number 15, here is the Dow. Again, remember, it had that nice coil, which it busted out of. Now it's pulled all the way back to the 20-day moving average. This is a potential support zone. We'll see if we can get some buying here or not. If not, the next support would be around that 50-day moving average. Next, chart number 16, let's talk about the KISS systems. So here's the S&P 500 KISS system from the website KISS tables. Now this actually had a pretty good exit. It exited last Friday. So those of you who follow the KISS systems and you get email notifications, you would have got this email notification last Friday. And if you waited actually till Monday to sell, you had a nice bounce on Monday. But it actually had a nice exit there. This is the default KISS system right from the website tables. I mentioned that because image number 17, here's the custom S&P daily KISS system. This one overall has better long-term stats, but clearly the website KISS version had a better exit. It exited last Friday. This one exited today finally. Now again, it still closed out a nice trade. It's a winning trade from that early May entry. But clearly the website one had a better exit. Okay, that will happen. Again, it's not always about the most recent trade. A lot of novices focus on that. They're like, oh, well, the website default KISS is better. No, it was this time. But the website went at a better entry back here, went long on October 31st. The website version didn't go long until later, November 5th. So it's kind of back and forth. But this one overall has better long-term statistics, but clearly recently the default one did better. But anyway, these charts are very useful. These are the DeMark counts. You can see we had DeMark 913 combos since May. Every one has led to a pullback, and obviously this last one has led to a really good pullback. Right? We closed right at that 50-day moving average essentially. Now, if we continue to melt down here, guys, hopefully we don't, but this here is the weekly ATR. Last time it held as support in April, as you can see. So this is the daily ATR. So that's why this is kind of useful to actually see the weekly. So it's still down here a ways. Moving average ribbon now is pinching. So it's still in a bullish stacking. So let's see if it can, stay that way. Chart number 18, here's the 4 time frames. First the daily up here. Here's the half day. Again, remember guys, one thing I want to point out, remember I've always talked about the first pinch squeeze as a great buy or sell opportunity. That's when the moving average ribbon first flips. Configuration, it has that first squeeze. Well, look at what happened on these lower time frames. Half day, you had a bearish squeeze. That was the first pinch. That was a great short on that lower high. Same for the 130 minute. Look at that. Perfect squeeze. And on the 78 minute. Those were great short triggers. Next. Chart number 19, here's the daily standard S&P 500 chart. So last Friday we closed right in that channel. We had a bounce, lower high, okay? And then of course today gapped below the channel, breakaway gap, closing pretty close to this uptrend line from the October lows. Still a little room. We're right on a 50-day moving average there in red. Again, moving average ribbon is still bullishly stacked for now. It's starting to pinch. There's also below the 50-day here, you have that uptrend line a little bit lower, and there's an open gap here that could be a little target too. Let's see if the bulls can get some buyers here soon. Maybe we need to fill that gap first. Again, assuming that this pullback gets bought. Next, chart number 20. Here's a clean half-day chart without a bunch of indicators, mainly focusing on price. So first off, that lower high bounce stalled right at that resistance supply zone on Tuesday. It was a great area to take profits. Gapped down today below this uptrend line, breakaway gap. And this was a demand zone. We actually closed below it. Again, there's an open gap here. I just showed you on the daily. You can see it here. And below that, here's a couple other support areas as well. Chart number 21, here's a 2-hour chart. First off, we had that rising wedge, as you know, last week. Remember I showed you that on the 30-minute chart. MACD divergence. Whenever you have a wedge pattern and MACD divergence, you better pay attention. Anyway, we had that sell-off. We rallied into that. We had formed that lower high on Tuesday, right into that supply zone. So remember, I was favoring that as some sort of wave B, and that's what ended up being the case. A down, B up, lower high, and this could be the C down, okay? Again, there's this big open gap here, so what I'm wondering is, do we sell down and fill this gap first, or do we try to bounce from here? There is no MACD divergence here. That's still very ugly, so that's suspect. Again, the bullish case would be this is an A, B, C correction. Again, C could go lower. The bearish case would be that we're going in a wave 3 down. So we'll see. You could also see here the moving average ribbon. So see how that first pinch there, squeeze on the underside? That confirmed that great short. Chart number 22 is the 60-minute chart. You can see the moving average first pinch squeeze up there. You can see the rally off that first demand zone into the supply zone where we stalled on Tuesday. Sell off. Now this one here, I added fibs to the late May lows, and we're a little below the 50% fib here at the close. We have that open gap below. Notice that 61.8 fib basically matches that open gap. So to me, that could be a target here to the downside. So that's still a little bit of ways to go. S&P closed at 54.27. That is at 53.80. If it wanted to go down there, shoot, that's another 47 points. So that's something to consider, guys. Now, in the 60-minute chart, there isn't any MACD divergence here either, so be aware of that. Next, chart number 23. Here is 15-minute chart of the S&P. Remember, on the weekend, I talked about this steep falling wedge on Friday. We did get a nice bounce out of it into the supply zone where we stalled out, right? The other thing that we had there is, Steve talked about this on Tuesday, we only had 3 waves up. Wave 1, 2, 3. Whenever you only have 3 waves, that's highly indicative of a counter trend bounce, hence a wave B. Had you have 5 waves up there, that would have been more indicative that you had some sort of trade low in. But the fact it was only 3 waves was a problem. Now, on the 15-minute chart, we do have some MACD divergence. Next, Chart number 24, here's the equal weighted S&P index. Remember, it had this beautiful coil that it broke out a couple weeks ago. It's having a nice pullback now. Again, this area is an area to watch. This is support, this broken trend line. So let's see if that can hold or not. Chart number 25, here's the 60-minute chart. So far, we have 3 waves down. You can see this A, B, C. Again, C can go lower. We filled one open gap today. There's another open gap below, which could be a magnet. Next. Chart number 26, here's the Nasdaq triple Qs, KISS system. Remember, this actually exited last week on Thursday, so it had a very good exit. So that was a good exit. Remember, you can see the DeMark counts. These have all been very good warning signals before pullbacks, especially this last one. Now this one, the Qs sliced below their 50-day moving average, where the S&P just closed right at it. Notice the weekly ATR is not too far away now. Chart number 27, here's the 4 time frames. Here's the daily up here. On the half day, honestly, this cycle indicator called it perfectly. You see the end of bull cycle. That was the early last week. That perfectly called the highs there. Anyway, you can see the lower high bounce, MACD pinch on the underside, and on the other time frames as well. Also, here on the 78-minute, guys, I'm seeing an end of bear cycle. So maybe short term here we'll get a bounce. Chart number 28, here's the SQQQ. That's the triple inverse ETF for the Qs. Early last week, I put this out as a trade idea, this tight coil, and it gave a great trade. Now, unfortunately, I sold it up here on the 850 area. I didn't buy it back like a dummy. And of course, then a huge pop today, up 10%. So, is what it is. I'm not perfect, guys. I'm far from it. But, you know, I like to learn from my mistakes. Chart number 30, here's a 30-minute chart of the Qs. Again, as Steve talked about on Tuesday. And again, if you're on YouTube, guys, you wouldn't have seen that because Steve doesn't post on YouTube. Only I do. You only had 3 waves up here. So that was indicative that that was a counter trend move. And of course, we got smacked down today. Chart number 30, here's the daily view of the Qs. Again, we filled that open gap, sliced right through it. Now, there is another demand zone right here. Let's see if this can produce a bounce here, short term at least. Chart number 31, here's the 2-hour view. Last week, we held that uptrend line from the April lows. Of course, today we lost it. We also filled that gap. There is another open gap down here around 455 from early June. Chart number 32, here's the 2-hour view. Steve showed this last night, the breakdown of the wave count, 1, 2, 3, 4. So that favored, again, a wave 4 into that supply zone, and we're now working on this wave 5. All right. Again, this could be wave 5 of A, or it could be something more bearish. Chart number 30, here's the 33, here's the 60-minute view. Remember that wedge pattern we were showing early last week? That obviously played out. Also, you can see the first moving average pinch squeeze there. Gave you a great trade. Filled that open gap. You can see the other open gap below. Chart number 34, here's IWM. This is the weekly, so IWM is still up for the week. You can see it tagged that supply zone last week where it got pimp slapped down from. And then today, this week, it was up in there again, pulled back. So that's a pretty big area, as you can see, that supply zone. Chart number 35, here's the daily IWM small caps. Again, you had a beautiful coil pattern, which we gapped up early last week. That was a breakaway gap, hell of a move. Pulling back here, it's now near the 9 EMA. That said, I doubt this 9 EMA is going to be the low. I wouldn't be surprised if this comes down lower in a C. And I'll show you what I mean on the 2-hour time frame. So chart number 36, here's the 2-hour time frame. First off, you can see that beautiful tight coil we had in the breakaway gap the previous week. But you had that big move up, move down. I'm viewing that as a wave A, wave B, lower high bounce, and now we're working on waiting this C. There is a couple open gaps here to be aware of. That could be magnets. All right, guys, that does it for the indexes. Let's go ahead and move on. By the way, ES futures this evening are up about 15 points. Again, after today's 130 point move down, that's almost noise right now. Anyway, chart number 37, here's the VIX. As you'd expect, the VIX, big pop today, closing right back above its upper Bollinger Bands, right? Also the ratio as well, the BVIX VIX ratio. Chart number 38, here's the VIX itself with the Bollinger Bands. So, guys, again, big close out of the Bollinger Bands today, but look at my comments here. The VIX had formed a strong base over the last 2 months, and this was the first rally right here. Many times you get 2 or 3 moves outside the upper Bollinger Bands before the market puts in a low. Okay, the comments here on the system kind of cover this, but you can see the effect here a little bit. Had a close outside the bands, came back in, closed outside the bands again, and then you didn't get your real bottom until over here. Well, look at this nice base the VIX had formed. So yes, it had a nice pop out of the VIX 3 consecutive days. You had a VIX Bollinger Band buy signal here, which did produce a bounce on Monday and Tuesday. But then if you didn't sell that bounce, market sold right off again today, and it's outside the Bollinger Bands again. Okay. That said, on a positive note, there is some RSI divergence here now. So take note of that. Next, moving to the bond market, chart number 39, here's the 10-year Treasury yield, up 1.1% today. Perfect rally off that 61.8 fib over the previous week. Remember that 61.8% fib is always an important area. I call it the master fib. Kind of sounds like a rap song or a rap DJ. Master fib. Anyway, that didn't help the market today. Chart number 40, here's the weekly version of the 10-year. You can see this coil that's setting up. Chart number 41, here's the weekly view of TLT. Have a coil there as well, as you'd expect. Here's the other thing, guys. Here's the yield curve. I haven't shown this in a little while. The yield curve popped up today. It's been stuck in this range since 2023, around the 0.92, 0.94 range. Today it spiked to 0.97. So that has my attention. If this goes over 1, the yield curve would be no longer be inverted. But that's typically when your recessions start or sometime after. The yield curve has been inverted for 750 days now. That blows away into these previous times. The only other longest time was 1920s before the, Great Depression stock market crash of 1929. Next, moving on to the market sectors, chart number 43. Here's before we go to that, here's the high yield corporate. So we had a divergence here recently, and of course then a big sell-off here in the S&P. Chart number 44. Here's moving on to the sectors. Here's XLK Technology. Remember, they formed a really nice divergent high there in mid-July. Anyway, we filled that gap on Friday, but then after the bounce in the 9 EMA, got smacked, lost that. There's an uptrend line down here from the October lows now. Maybe that's a target. Chart number 45, here's the semiconductors also being smashed down, filled that gap, closing at the 50% fib. Chart number 46, here's the banks. Now they're holding up quite well. A little pullback today, but obviously holding up well. Chart number 47, the financials pulling back, but obviously still holding up fairly well. Chart number 48, here's the regional banks, KRE, the ETF. Steve pointed this out last night. This had a beautiful divergent high. Look at that MACD. Stochastics were overbought there. This was a great short setup. Chart number 49, here's the daily. Next, chart number 50, here's the transports. Again, after rallying out of this pattern into the supply zone, they got pimp smacked down from here all the way back down. That's why these supply and demand zones are important, guys. If you didn't take your profits there, you'd be crying. Chart number 51, healthcare, one of the defensive sectors, again, broke out, back tested previous resistance, became support, moving up. Chart number 52, XLE Energy, essentially flat today. Otherwise, we have 3 ways up here. It's possible that completed an ABC and we go to another low. We'll see. This is your first support though. And moving on to commodities, chart 53, DBC down about 0.75% this week. Again, about a month ago, stalled right at the top portion of the coil. Still in this coil pattern it's been forming for a couple years. Chart 54, here's crude oil. Again, also got smashed down from the upper coil trend line a few weeks back. Chart 55, USO, crude oil ETF. It is into a, yesterday it went into a demand zone here. It did bounce off of it a little bit for now. Chart 56, natural gas, after bouncing off that big support, stalling around the 9 EMA, pulling back again. Chart 57, copper. Boy, copper has been absolutely smashed. First off, it had this parabolic blow-off move in May. We talked about the wide moving average ribbon there. Sold off, then bounced up, lower high, tested this area, which became resistance. Boom, down again. Now it's testing its 200-day moving average. This is also a demand zone. So if you wanted to dip your toe into copper, I talked about it. This would have been a good area to start watching. All right. A way to trade copper is the ETNs. CPER is one of them. There was an open gap here, by the way, that was filled today. You have the 200-day moving average. Again, I don't know if it's going to stop here, but it is, it's had a healthy correction here. So if you get a trigger, this isn't a bad area, but you need a trigger on these. This is a demand zone. Chart 59, DBA. Then, as you know, it's been holding this demand zone for months. Bounced off here again recently. A little pullback today. Chart 60, corn. Remember I said on the weekend this looked like it was ready to pop. Had a nice pop on Monday. And it's been up the last couple days, though off the highs. But it gave you a trade. Chart 61, wheat. Talked about this on the weekend. This was at major long-term support. Double bottom here and support going back to 2020. So I thought it looked a little lower risk here. I took a shot at it. Hasn't done much yet. Chart 62, here's the daily wheat chart. Yes, some MACD and RSI divergence here, but again, not much action here, just a lot of doji type candlesticks. Chart 63, coffee. Coffee pulled right back from that resistance zone a couple weeks ago. Chart 64, Bitcoin. This is the weekly chart. It's down 4% for this week. Again, it's still possible we completed that wave 4 back there in late June, early July, but we'll see. Still in this little kind of flag pattern at the moment. Again, if this is the correct count, wave 4, I eventually expect this to go to a new high in a wave 5. Chart 65, here's Bitcoin on the daily, starting to sell off here a little bit. Again, you can see the overall bigger pattern. Chart 66, here's the US dollar. Remember, it bounced off that demand zone last week. Flat today, essentially. Here's the weekly chart, still in this coil pattern. Chart 68, here's the Japanese yen. Remember, I've been eyeing this for a oversold depressed play. So it's been moving up nicely. It's up 2.3% this week already. Chart 69, here's the monthly chart. I love this monthly chart. Why? You have a beautiful falling wedge, MACD, RSI divergence. That's why I bought some of this a week ago, because I thought it looked lower risk as a bottom fishing play. Moving to precious metals, chart 70, here's gold. So pull back to the demand zone. Now it has held that so far, bounced off of it. We'll see, can this go to a new high or does it form a lower high? But so far it's bounced off this demand zone. You have a bigger demand zone down here, but I said watch for this to be first support. Chart 71, here's the tradable ETF GLD. Next, chart 72, silver. Slight pullback today, still holding this extended trend line for now. It is below the 50-day moving average though, be aware of that. Chart 73, here's the weekly chart. Again, it's essentially flat for the week. Remember, silver had a major breakout in March there. Still holding up here fairly well. Chart 74, GDX on the daily. Pulling back. To me, I'm wondering if that's a lower high setting up and it's going to come down again now. Again, this, your beautiful buy signal on GDX was back here on March 1st. Up in this area was nosebleed territory. Next, chart 75. Here's the bullish percent gold miners index chart, BPGDM. Remember, my issue with this area a little bit is that, this is up here at nosebleed territories. Not like the buy signal back on March 1st when this was an oversold territory. Finally, moving to trade ideas. I did not add anything new here, guys. Just following up on some recent ideas. STVN. Bit on the list, I added it as a long idea back here in early July, which has done excellent. And honestly, with this sell-off this week, it's held up very well here. Chart 77, NVIDIA, pulling back here. Now, this is a demand zone. Okay, so if you're looking to buy NVIDIA, start watching it in here. If you get a trigger, potentially you got an ABC forming. Chart 78, AMD. First off, AMD. We had it as a long idea. It rallied up to the supply zone. But if you didn't sell the supply zone, it got smacked down hard. Initial technical bounce off the 200-day moving average, but boom, down again. So this has been absolutely taken to the woodshed. Chart 79, PACB. This is a long idea I had on Monday and the weekend. And honestly, it's held up well this week. Yeah, hasn't, what was it, up 1.6% today? I like the base, but it's held up very well here. Another one that's held up well is this YY. I've had it on the list here for over a week. Still holding this flag pattern. It was up initially today. Managed to close down only 0.25%. Chart 81, MDGL, another one, this cup and handle potential, still hanging in here for now. And the final chart, guys, this bank, regional bank, NYCB. I like the base. It was down today 5% though. The issue is this one reports tomorrow morning. So if you're long this, guys, you're either gonna be a hero or you're gonna be a zero. It's either gonna pop up nicely or it's gonna gap down. Previously, back in January on earnings, it gapped down 50%. Now, the fact that it's been basing here and it's 60% of the price, maybe it doesn't get that strong reaction down, but we'll see. Earnings are tomorrow. Well, let's see what this does. All right, guys, have a wonderful rest of your evening. Thank you for all your support, and let's see what this old market does tomorrow. Take care.